Hello, traders. Hello, everyone. My name is Horvat, and welcome to our new analysis, which will actually be some kind of a educational part of the Elliott wave theory in general. So, what is actually the Elliott wave theory? Well, the Elliott wave theory tracks the crowd psychology. Okay, and as you know, everything, and not only market, but everything moves through cycles. Okay, and if there is an increase of optimism, we can expect that sooner or later this cycle will come to an end, and we know that then the next cycle will occur, meaning that this cycle will turn into a pessimism. Of course, it's the opposite is the same. If there is an extreme pessimism in the market, of course, we can expect that sooner or later this cycle will end. And this is not only visible on the market. So why we are, and personally I am using this very often on the markets, is because of the data. Okay, to analyze something that has a very strong optimism out there or pessimism, you just need a lot of information, and this information is very easily visible on financial markets because we have a lot of data, especially in today's technology. So with the Elliott wave theory, if you know in which part of the cycle we are, then you know that which cycle is probably coming, right? And especially this is very useful when we are at very extreme levels. So as you know yourself, everyone will be looking for maybe for sentiment index on S&P 500 when we will be approaching the new all-time highs. Well, and that's obviously if you have a lot of optimism out there, you can expect that market will sooner or later slow down, because you know that each cycle will at some point come to an end. And this is actually what the Elliott wave theory is all about. But what is really important is that Elliott wave theory is fractal. It means that those cycles, pessimism and optimism, are not visible only on big time frames, but also on the smaller time frames. And as I said earlier, not only on financial markets, but also on other stuff. Okay, so this Elliott wave theory, or general this sentiment of optimism and pessimism, is also visible in politics. Okay, and we can be looking and trying to apply the same theory also on this year's US presidential elections. So we have here polls showing us here on above that Biden is actually more popular at the moment. It looks like that US citizens are in favor of his win. And what I'm seeing here, actually from an Elliott wave perspective, is that we have some very nice move out of this triangle formation here. Okay, so if I put this wave counts on, you can see that actually we have been moving here out of this triangle formation. Now, whenever we consolidate for a long time and then you see a break out of consolidation, it normally indicates that actually we can be just seeing a sharp move out of consolidation before this whole cycle up from the lows could be coming to an end. So it's just some kind of a mania that is suggesting that sooner or later this mania will end, because everyone are getting just very excited when this big consolidation ends. But this is actually very useful with the Elliott wave theory if you see a move out of a triangle, because you could assume that this trust is final trust within a larger, higher degree of trend. So from that perspective, okay, from a sentiment point of view, I would not be surprised if actually these pools would actually shift around, meaning that polls would not be in favor of Biden anymore as we approach elections. Well, on the other side, we have Trump down here. What the cycle of the sentiment is showing us here? Well, you have a very nice and clean 5 waves up here from these lows, meaning that this first 5 wave cycle was a change in trend into some positive into some positive direction. And every time when you see something moving extremely sharply, then you can expect that actually this will slow down. It's the same thing with a car. If you're driving fast, sooner or later you will have to slow down when you approach the red line, right? And then again you will accelerate, and that's when we can compare it to a pullback. So you slow down a little bit and then again starting to accelerate. And this is how the Elliott wave theory works. 5 wave steps in front, then you have 3 step backs and 3 step back and so forth. So what we are expecting here now is you have an ABC correction, right? Meaning that there are people, a lot of, they're not decided. Bulls or bears are fighting because they are trapped in the range. But if you know that the first cycle was very strong, then you know where the big trend is. It suggests that actually this trend has resumed, that bulls are going stronger, that optimism is still there, but not at the extremes. In fact, this extreme, this move towards higher prices, towards more optimism, could continue after ABC retracement. And this is shown very nicely here. Actually, it looks like a pretty clear Elliott wave pattern. I mean, if I would see this, let's say maybe on the S&P 500, I would definitely be interested to look for long opportunities. So what this tells us, that there is a chance that Trump will actually try to gain more positive sentiment in the future, meaning that bulls could actually be in favor of his win. So we will see how this unfolds. But I really love the Elliott wave theory because, as I said earlier, it represents how the market moves from optimism to, not only market, but everything from optimism to pessimism, and with repeatable patterns with extreme readings, you can actually have an edge to know in which direction is market most probably going to move. It's, of course, nothing works 100%, that's impossible, but it's probabilities versus possibilities. It's traders' reaction to news events and every information that is available out there. Traders, thank you very much for your attention. I hope that you enjoyed this presentation, and talk to you soon. Bye.